The market, by the way, just wanted to mention that it's now getting worse. So, as Anuj was also telling us a while back, I think it won't stop at this because there are so many headwinds now. There's the RBI policy as well. So, also what I'm noticing, Anuj, is that it's a wave of profit taking, right? Across the board. Autos, banks, all the guys that were rallying in the last month or two are now selling off.
Yeah, even the outperformers are selling off, right? Look at the market bet, Sonia. 1:12. I don't recall when was the last time I saw this kind of a market bet. So obviously that's under quite a bit of pressure. Power Grid was down 10% on Friday. One would have thought that there would be some attempt of recovery. That's down another 8%. Tata Chemicals is down 6.5%. Tata Motors is down 5.5%. RBL, AU. Now even the outperformers, some of the chemical stocks which were doing well, they are beginning to fall off. Deepak Nitrite, Navin Fluorine, Jubilant Foodworks, Ashok Leyland, Hindustan Aeronautics, which has seen a one-way rally. Looking quite bad. And this is the start of the week, expiry week as well.
I mean, I would still say just a catch-up, right? I mean, I think we were talking about that earlier as well. Maybe a bit of a painful catch-up on the way down and may last for a little bit. We'll see. But when you look at day-on-day changes, always put that in context with what you've done relative to where everyone else is or, the rest of the globe is at. And this has been a particularly tough year for the rest of the global market. This has been not a great year for Indian equities, but relatively, yes, it has been a great year so far. So that maybe is getting corrected a little bit at this point. So 17,050 now on the index. Sonia.
Also, we keep talking about India's outperformance, but when you look at individual portfolios, there's so much pain, right? I mean, large caps, just look at Reliance. It's down 10% this month already. TCS, Infosys, ONGC, and that's just the large caps. If you look at, you go further out, I mean, even from the headline index, names like, say, Tata Motors, Bajaj Auto have all lost 15-20% this month. Yeah. So the pain is quite evident in individual names.
Absolutely. It's visible. But again, the market did outperform. I think the big concern is that the same ETF money which led the market higher in the last couple of months, in August specifically, is that leaving us. Mitesh Thakkar is back with us for some fresh trades. Mitesh, hi, morning again. Been a very ugly sort of first hour. The market down about 250 on the Nifty and down about 700 on the Bank Nifty. But do you think it makes sense to take a contra long here or not yet? And what about your individual stock calls?
Anuj, actually, I was looking for some kind of a pullback if we open gap down, and if not from 17,150, then I think around 16,990, 17,000 area. That's the 200 average level as well, and also a gap area. So I think around those levels, at least, what we'll do is take some money off the short positions, trail your stop loss to 8 tight levels, and then if you get an hourly bar reversal, then maybe attempt a long. But yeah, I think around 17,000, 16,990 levels. I think definitely, time to take some money off the table on the short side and trail your stop losses to very close to the current market prices. Having said that, a lot of stocks are still giving breakdowns. So as of now, the bias remains on the negative side. State Bank of India gap down and has continued on the negative side. So sell that with a stop at about levels of 550. Look for targets of around 522, 524 on the downside. And the other one is Hind Copper. Similar setup, a gap down and a negative breakdown on the hourly chart. So here I would suggest a stop at about 110 for targets of around 100 on the downside.
Mitesh, stay with us. Thanks for those trades. By the way, Anuj, you were talking about that ETF bit, right? And the EPFR data kind of bears that out. We put this out on the editors roundtable on Friday as well. The data, I put this out in the morning today as well. So this is the latest data, from EPFR, which tracks flows. Remember, bulk of the flows, not bulk, 94% of flows, in foreign flows into India comes through emerging market funds, split between active and ETFs. Active is the majority, ETF is the smaller. Active has been seeing outflows, but now ETFs are also seeing outflows. May was positive, June was positive, July was positive, August was small negative, and September so far, this is as of last Wednesday, is negative $2.6 billion or so. So this is not India ETF, this is EM ETF, and there is a little bit of a reversal, which is very much evident at this point in time. Yeah.
Okay, well, let's try and re-establish that connection with the management of Stovecraft.